And we're live.
Hey, what's up, YouTube? I'm Neil Hamilton, and this is another episode of Get Technical. Get Technical?
I think we get
I
technical
think,
here.
yeah, I think that's it. With me today is producer Aaron Bree. Just kidding.
No, it's an upgrade.
It's an upgrade. It is. Yeah, it's a little bit of an upgrade. It's Aaron Thomas.
I got a little bit of an upgrade last night too. I got a haircut at like 10:30 from my barber in Dearborn. I know Jason was giving you.
We don't know what haircuts are around here. I just love when we have a producer and they start talking and I kick them out of the show. So I'm going to get my screen share going here, guys. Add to the stream. Everyone hit that like button for producer Aaron Thomas. That is the guy. He is day one. He taught Jason how to use a webcam. Jason is really used to watching other people on webcams. So getting Jason on the webcam was like a big aha moment. There were tears. So thank you everyone for tuning in. And if you're coming here from Power Hour, I'm really sorry about that, guys. There's only so much we can do with them. But yeah, shake off those energy drink sweats. 13, you got me nailed. But you know what, today I'm cycling out of energy drinks and I'm now on instant coffee. I'm back to the instant coffee. I got the instant Folgers. And I spilled a little bit of it. I got it on my Luke Jacoby limited edition. A lot of you guys don't know this. Benzinga, we got our fingers in a lot of pies. All right. And one of those pies is the fashion world. So we actually produce clothing. You can find it at swag.benzinga.com. And Luke, before he came over to Benzinga, was majoring in fashion design. And so he did have some connections. He interned over at Banana Republic for a while. Actually has his own line of shirts. And I'm not kidding. His own line of shirts. This is from the Luke Jacoby line of shirts, Hot Stocks Luke Jacoby line of shirts at Banana Republic. The line has ended. So this is limited edition. I'll be putting this up for sale. Zingers only, Zinger discount on this one. But this is a size XL Luke Jacoby limited edition shirt. Optimized for quick typing, for doing trades and sending emails, as well as there's reinforced elbows and gusseted armpits for his signature gesture. All right, like that. Like, listen, guys, buy my shirts. So yeah, if you guys want to get the limited edition Banana Republic Luke Jacoby shirts, I've got those here for you. Yeah, medium. It's definitely a medium. You guys, I love how you guys can look at it and know exactly what size it is. This is a medium. This fit me in 2019. Like real well. I'm a different boy these days. That is for sure. Holy smokes. I'm actually going to take this off. There's no way I can keep this on. Yeah, a couple people are saying it's a European cut. Yeah, I mean, sure. Yeah, definitely not the body shape of the average American, which getting it off is even like a thing. We'll get to the charts in a minute. Make sure you're hitting me with your tickers. One thing I want to point out is Netgear. Take a look at that one. I'll get that shared on my screen. And guys, we're going to play hedge fund today. All right, so we're going to drop the link to the straw poll in a minute so that we can play hedge fund. I know. You need the comfort fit, bro. No doubt. All right, let's get this screen share back up. Well, we're gonna change that song. All right, so get the music going. Straw poll. We're gonna create a poll here. So what we're gonna do is look at tickers. The first one I got up here is Netgear, ticker NTGR. You guys know them. Wi-Fi technology. Telecoms have been strong this year. And that's what gave me a little extra confidence in this one. What a good looking thing. We'll go into the details in a second. All right, so title, should I invest? Question mark. Answers, yes, no. And I think this is going to reverse red and green, so deal with it. Okay, let's create the poll. I got my whole thing up. I'll delete some of this other stuff so you guys can clearly see this chart. The 50 and the 20, I think, are the most important things to look at here. And I'm going to move... Whoops. I'm going to remove my Fibonacci lines. And I'm going to explain my thinking on this in a second. Share. Copy link. All right, you guys in the chat, you've got the link now. So click that to get to the poll while we play Hedge Fund. You guys are my floor traders. We're going to go through the stocks, and you guys let me know if it's a yes or a no on adding it to our quadrillion dollar portfolio. All right, so the reason that I like Netgear. Netgear got hit, went down, crossed below the 50 and 20-day moving averages, bottomed out right around 36.11. Yes, it went down further on this wick that you should be able to see. Let me, here, I can open the results here. Let's do this right. But yes, the stock went down further. There's a lower shadow here. Should be able to see that. There you go. All right, so there you can see the live results as we vote. But by and large, I'm looking at this like a double bottom. So when I was looking at this yesterday. So when I saw this, I started getting flashbacks to what Apple and some of the other big FANG stocks were doing recently, like a couple weeks back, which is a brief little like intermediate downtrend. Not intermediate. There's definitely a short-term downtrend. And then they double bottomed. What does a double bottom mean? It means that we had our price action approach a level. It's what it sounds like. It's a rounding sort of pattern, and then come back up and then hit that price level again. And as long as we're touching that price level twice, and it can be, again, guys, markets are organic, so it's not always going to be the exact price. Yes, sometimes it is, and that's awesome. That's we love that. But you need to be able to look for things that are, you know, a little bit outside of the perfect textbook price pattern to be able to identify opportunities. And this one's still pretty close to perfect. It just goes a little bit outside with the wick. Doesn't mean we discount the wick ever when we're doing our charting. I'm just doing this here for illustrative purposes here on this double bottom on Netgear, NTGR. So I've got the double bottom here identified. The next thing that I want to identify with a double bottom is, when is this double bottom taking me out of the downtrend that I was in? When is the right butt cheek, which is this one? We got left butt cheek, right butt cheek. When is the right butt cheek getting me out of the trend that I'm in? So we've got downward trend. Let's identify that. So the way that I do that, and I've done it here, but I'll do it again. Removing all of my lines, removing most of my lines anyway, is going to the pivot point that led me from a short-term upswing into my little short-term downtrend, and then getting my line tool and putting my first point on that spot, on the highest point of that candle. Then I want to anchor my next point on the upper part of the butt crack in our double bottom. In doing that, I get something kind of like this. I had it a little bit more aggressively before. Why did I have it more aggressively before? Because I was actually using the highs on this downtrend, which can be done very easily. You can see that if I draw my pink line here to line up with those, it's very clear that that's a sloping line of resistance. That matters. And actually would have been a really nice entry yesterday, but I totally whiffed it on that. But being more conservative, I drew it down to my butt crack point. Kind of up to you how you want to do it. If anyone knows in chat what has worked out for them most often on this particular thing, I mean, this is a scenario I see a lot, honestly. And I'll show you, like, as soon as I saw this, I'm like, I'm not going to miss out on this the same way that I missed out on. Let me get Apple open. Missed this one. So I got this drawn for you. I just pulled this out of the oven. It's already made for you. We got Apple. I went to this has lyrics, is distracting me. I went to the top of the pivot point where my uptrend turned into a downtrend. and then I anchored my line there on the top of that pivot point, and then again on the cleft, or perhaps the cleavage. I think that the technical term, if we did have, if we had, what's his name? If John Murphy were around here right now today, he's a guy that wrote Technical Analysis of Financial Markets. He would call this the apex of the ass cleavage. And so we've anchored it here at the tip of the pivot point, apex of the ass cleavage. And then you can see this area that I've circled, which I'm going to remove my circle really quick so you can really clearly see this. That's our breakout point. So what we're looking for is a break above the sloping line of resistance in our downtrend. All right. We've identified that we're starting to form a double bottom. Now we're looking for an aggressive entry. All right. We love the stock. It's Apple. We know there's buyers behind it. So we're just timing it. And timing it is a candle close, a session close. So I'm looking at day candles right now. You would have wanted to see what we've got here, which is the body of a green candle closing above the sloping line of resistance. And that's what I've just got circled here nicely for you. So there you go. And entering at that point with Apple, I mean, so it's after the close. So let's just assume you entered at the end of the day, 3:45 p.m. Detroit time, on this stock, Apple. That would have been a profit potential, depending on how you time it. I mean, you should have been able to see the writing on the wall here, because we started to get pretty, well, Apple does get pretty overbought, and it didn't get terribly overbought before it rounded, but you should have been able to see the writing on the wall with this rounding pattern. But that would have been a profit potential of about 10.25% in 1, 2, 3, 4, 5, 6, 7, 8 days, 8 trading days. So yeah, I mean, how can you be mad at that? The next thing, oh yeah, so let me get back to Netgear now. NTGR. That's what I think is going to happen here. Or at least I hope so. Actually, let me go back to Apple. I want to check on something. So the thing that I think I'm going to hit with Netgear is resistance at moving averages, the 50 and the 20. Those old chestnuts. So we got our 50 and our 20 here. And what was great about Apple is that we had this confluence where the 20-day moving average lined exactly up with our breakout point. So some people might not have been looking at it, or algorithms or whatever might not have been looking at, hey, there's this pink line and it's at the apex of the ass cleavage and it's crossing through over here on the right side of the butt cheek. And it's time to trigger a buy. Some were probably just saying, as soon as that thing crosses above the 20-day moving average, buy. And then, of course, crossing the 50-day moving average was yet again another booster pack for it. So that's Apple. What's different about Apple previously in this time period, which is the end of March of this year, and Netgear now, is those moving averages. So if you go back to Netgear, take a look. Which I'm actually... This is nice. All right, so look at this. I didn't get a chance to look at this. I tweeted about it this morning. I'm like, yeah, I'll probably do this at the end of the day. I think I'm going to do this trade. And a couple of people were like, well, Neil, you're not sticking to the textbook. And they were right. If you're watching right now, guy who tweets at me, I appreciate your input and I want you to keep it coming because you're always right. Insofar as I can tell. But look at this stuff, fancy stuff. This pink line here that touches our ass cleavage and then slices right through the right butt cheek is lined pretty darn well up with the 20-day moving average, which is this yellow line. All right. Beautiful stuff. We have broken through the 20-day moving average here on Netgear. And remember, Netgear is a telecom stock, which that sector has had a lot of strength this year. So I'm being told bring up the 200-day moving average for Netgear, which I'm gonna do as soon as I finish bloviating. But we've crossed the 20-day. I'm looking for resistance at the 50-day. Now let's bring up the 200-day, like 13 in chat said to do, which I've got here. Are you guys thinking what I'm thinking? The stock market said, hey, there's some crazy stuff going on here, Netgear. The Wi-Fi is a little bit spotty. I got to be honest. We're selling you off. Why don't you sit your ass down on the 200-day moving average? And that's what Netgear did. They sat down and they're starting to stand right back up. Starting to stand right back up, crossing through the 20-day moving average, heading straight toward the 50-day. So how am I going to do this? I'm thinking something like this. Thank you, 13, for calling out the 20-day moving average. I'm thinking something like, where's my, what you call it? I got a long position thing. So I'm going to thinking something like, depending on where we close, I buy my stocks at session close. Y'all know that. Unless I'm getting squirrely, which I'm one to do. Targeting something like that, setting my stop loss, I would set it at like a support level. Like I'm actually going to set it at the resistance here, maybe a little bit higher. Super conservative stop loss. I don't give a damn. Y'all can come at me about getting stopped out. I don't care. I don't care. Super conservative stop loss. Entering, I mean, as long as it's still crossed above the sloping line of resistance and this 20-day moving average, I'm targeting about where that 50-day is. Pretty damn good. And then let's take a look, because it has been said that we'll probably hit the 50-day and start to get some sort of fade. I would have to agree with that. It depends on if we get a surge in volume, which, guys, let's look at the volume. Trending downward. Can you guys see that? Volume trending downward on the stock. Didn't even get a surge after it crossed the 20-day. So this is just a nice formation, but it doesn't have the that little extra behind it to totally get it all the way up there. Nonetheless, I think this is a really good demonstration of a double bottom pattern that is what everyone was looking at just a few weeks back at the end of March, beginning of April with our FANG stocks. So you saw with Apple, Booty, Microsoft was a little lopsided. That ass had some mileage on it. Trying to think. Yeah, this is the mileage here. But nonetheless, I mean, the 20-day cuts right through. I mean, I can do this here. Yeah, that ass has some mileage on it. So Microsoft, let's try it. Facebook also was insane. Wow, I really wish I would have made this trade. I'm an idiot. Sometimes I do stuff on this show for you guys, and then I'm like, I'm going to do this. I'm going to get this at the close, and then I forget. And then I come back on the show, and I'm like, oh, shit, I could have made a lot of money doing that. Dustin, no volume means it could be a fake out. Kind of, yeah. Yeah, it could be. Like fake out. I tend to think of a fake out. I don't know. It depends. I don't know if there's like a textbook definition of a fake out, but I tend to think of a fake out as like downtrend, which this is actually downtrend, a little bit of an upswing, and it's setting a trap for bulls, like a bull trap. Also think of it as, yeah, it could be a fake out. So like if you have, say this is a resistance line up here, and then you're forming like, say you're forming an ascending triangle pattern, right? And you want your stock to break out. A fake out could be like a couple percentage above the resistance line, and then it whipsaws right back down, which can happen. That would be a failed breakout. And from failed moves come fast moves. So write that down in your little Polly Pocket notebook, Blue's Clues notebook. From failed moves come fast moves. So if I go back to Netgear, NTGR, could get rejected, son. We could hit this thing and just go right back down to that 200-day. Absolutely. Look how conservative your guy's stop loss is going to be if he doesn't forget to trade this at the close. I'm setting myself 0.65% of whatever I put in. Yeah. Let me get a like. Everyone hit the like button for Blue's Clues. All right. The Sherlock Holmes. Blue was the Sherlock Holmes of the Nickelodeon era, which I think is all but past. I actually don't know what network that was. The power of the mighty daily 200 MA. Yeah, if you guys are watching and you're not any of the absolute maniacs, and I know that you're here, some of you, look, I love you guys, but some of you are perverts, maniacs and perverts that watch the live stream, and you're watching this, you're on your lazy boy eating a TV dinner, and you're watching the recording of this show, and you're actually trying to learn something. Thank you for watching. 3 very important regular moving averages, not exponential moving averages, that you will see written about in, you see it on Benzinga.com when we talk about key technical levels for stocks when we cover them in the news. But you'll see it throughout any publications talking about what's happening in the markets. Your 20-day moving average, your 50-day moving average, your 200-day moving average. You can do any other moving average you can imagine. All you gotta do is plug in a number in an increment, daily, hourly, minute, whatever. But the 50 or the 20, the 50, and the 200-day moving average are just staples of old school technical analysis and are often used as sort of watermarks for the health or lack thereof of an equity or of a stock. So crossing the 200-day gives buyers, or crossing the 20-day gives buyers a lot of confidence. Crossing the 50-day in this case gives buyers a lot of confidence. Another cool thing about moving averages, show you all something. Let me show you something. I'm going to use a cryptocurrency to demonstrate something for you guys. All right, so this cryptocurrency is LSK is the ticker, LISK. All right, I'm going to use a cryptocurrency for this. I'm going to reset the poll for invest. You guys are split on whether to invest in Netgear, which is actually totally fine. Makes sense because I'm totally split too. It's a very short, tiny little scalpy swing trade. Let me refresh the results on this thing. Does that work? And then do I have a producer? If I have a producer, can you just make a chirping sound like an animal? Can you like a bush animal? Can you make a sound?
Chirp, 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 chirp.
Oh, excellent. Thank you. All right. So can you just make sure we keep dropping this link in the chat so the folks that are watching on their
Private chat it to me.
Nokia flip phones, they can. All right. Oh, private chat it. All right. We'll use the private Illuminati chat. And just use that link to participate in the hedge fund voting. All right. So wait, I want to refresh the results. Can you stop? Oh, okay. I see. I got to reset it. This is not working. Okay, we're at 0. All right, auto refresh is on. All right, we're looking at LISK. Go ahead and consider this. All right, if you guys don't have access to a cryptocurrency brokerage, I have been in the trenches, like trying to figure out the best way to buy these damn things. So I have plenty of stories I can tell you what to avoid and what to go for. But nonetheless, we should be treating every tradable asset the same way in the world of technical analysis, right? It's completely agnostic. So at any rate, we're looking at LSKUSD, LISK paired with the US dollar. I'm going to switch to the monthly, and I'm trying to demonstrate something called the golden cross and the death cross, which is another concept using moving averages that rocks with cryptocurrencies. Like, I'm going to show you're going to hate yourself when you look at this and realize that you miss some golden crosses on what these currencies are exploding right now. So LISK actually is up 37% right now on the day. It's been very performant this month. So at any rate, this is the monthly. All I'm illustrating here, I'm just going to delete everything. All I'm trying to show right here, hide, nothing but price, hiding this, nothing but price. I'm getting some yeses in the vote. So thank you guys. Thank you, my trading floor. Good work, my minions. Is that we've got a rounding bottom. As JC Peretz would say, all-star charts, it doesn't matter what the asset is. I love a big old round bottom. So we've got a broad base here going all the way back to May 18. All right. And we're starting to get back up to some key levels here, buddy. I'm not even going to draw my lines. Here I'm just demonstrating a point about moving averages. So I'm switching to the daily on this thing so you can see how this price just consolidated, and then started to pick up here. Which, if we take it, I'm going to take it from kind of the high here, and then I'm going to take my measuring tool up here, and grew 654%, which is like in crypto terms, like not even a lot. So this is that it grew that much over the course of, for like three in the month that's just starting. And if you start at the bottom of the candle, it's 875%, right? So it would depend on how you timed your entry. Nonetheless, I'm going to switch to the daily, and I'm going to pull up. I have a study, or what you would call like an indicator, if you're using TradingView, on my trading tool, which is TradingView, that automatically points out when this happens. But the concept is, when you are looking at a stock or an asset, and you have your 50-day moving average, which I have here in yellow, and your 200-day moving average, regular moving averages, not exponential, I have them here, yellow and red. You can use that. You can use a cross between those two moving averages as a buy or sell signal. And I have this like done easily for me, which you guys should be able to see. I've got this like red line here and this green line. When the 50-day moving average crosses, so this is the 200-day, the slower one. When the 50-day crosses above that, that is referred to by some as a golden cross, and is taken by many as a buy signal. And look at this. Look at this. Golden cross is like, I mean, it depends on who you talk to. Is a golden cross like a golden shower? Totally depends on which president you're talking to. Because for some people, golden shower, yes, it's golden, just like golden cross is amazing. Some people, golden showers were like a death cross. Depends on who you're talking to. And I'm not here to kink shame. I'm not here to nope on your nasty. But yeah, so I mean, looking at this, it's just a cool thing you can do with your moving averages. We've got this golden cross right here. If you would have entered on that after seeing that, sheesh, God, it just keeps going and going. So that's Lisk. What does my trading floor say? Is that we're getting a solid yes. We're getting a solid yes on this. All right, good job, guys. We will add it to our $1 billion BZ Bucks fund. All right, so that is enough bloviation from your boy Neil. It is my great pleasure to welcome to the show Christian Fromhertz. Let's go ahead and bring him on. Hey there, Christian.
How you doing?
Wonderfully. How are you doing, man?
Good. Happy Friday. How's things going?
Things are going wonderfully. I'm very happy to have you here. I got to ask you, what kind of bike is that in the background?
So that is my commute every day. That is a Cirrus. Where is it?
Other side.
Yeah, it's a. Sorry, I'm looking at the camera. It's a Specialized Cirrus. So it's a nice hybrid bike. It's not expensive, but I'm in New York City, so it's really nice for cruising around the city, weaving in and out of cars. Hopefully not getting hit by anything. So
I love it, man. Specialized makes excellent bicycles.
Yeah, they're good.
I used to have a Specialized Allez, or Allez if you read it like an American. Yeah, it's more of like a racing road bike. Actually, I still have that thing. I got to get that and start going outside more. Maybe not. Christian, I'm so glad to have you here. The last time that I spoke to you was at the first, and actually only, if I'm not mistaken, remember the Benzinga trading event in New York?
Oh yeah, absolutely. Yeah, pre-COVID times.
Pre-COVID times, yeah. So it's been a long time. Yep. So on this show, we just talk about technical analysis, and I love to have guests on like you that are a lot more experienced than me. Come on and talk about their strategy, their approach using charts to invest or trade. And I'm hoping that you've maybe got some stocks that you're looking at, or even currency pairs, whatever.
Yeah. Wow. Yeah, I saw you talking about currency pairs. That's interesting. Yeah, we got a kind of a, an interesting move in currencies and in bonds. So we could certainly talk about that. Can I share my screen?
Yeah, it's just like Zoom. If you go to the bottom, there's a share screen button.
Okay. Let me just get situated just for a second.
And Jay says hi, by the way.
Nice. Let's see. So share screen, and I want to share this screen. Let me just move this out of the way so we don't see that. All right. So can you see that?
Yes. Yep.
Okay.
Ooh, yeah, I like what I'm seeing.
So let me just turn on the market profile. I have a proprietary indicator called the market webs that I use, which really give me a sense of where buyers and sellers have previously met up. But I'm looking at like volume at price. So instead of looking at volume down here, which I also look at, but putting the volume in, on above studies rather than, your studies on the bottom of the screen. So it just really gives me a sense of where there's resistance, where there's support. So, S&P, kind of shocked at this week, how it's kind of turned up because it was such a choppy week for the S&P. But we had some hesitation this week and, managed to overcome it late in the day yesterday. And since then, some pretty nice price action.
Mm-hmm.
So I wanted to just start with, I always start with the macro, and we can and then we can kind of dive into that. But, I'm really interested in what's going on with bonds, because bonds, I think at some point we're going to hear from, Powell. And now, while this jobs report this morning was not particularly strong and was different than expectations, I think, we keep hearing about this transitory about inflation. But I mean, we're seeing obviously inflation all over the place. So if they do start to say, hey, this price in lumber has gotten out of hand, this price in steel has gotten out of hand, this price in agriculture has gotten out of hand, what's their first move going to be? And that's probably going to be, tapering those bond purchases. So, I really am paying attention. I think this was a false move today, bonds rallying. Right. Obviously, when you see bonds go down, interest rates go up on the long end of the curve. So I'm a little bit concerned that this could start to kind of move back this way. Now, we really don't have a signal yet, other than this was a rejection of going higher. So it's something that we're going to have to keep tabs on. So things that I'm interested in is, so my take on the market is always, I'm a trend trader. And I try to be as objective as possible. And whatever areas of the market are trending, I want to participate in. So a couple new things, not that, so let's talk about tech for a second. Everybody's been talking about how tech has, been underperforming and so forth. And there's been a rotation out of, but it really depends on what tech, right? So if you look at the XLK ETF, which is the big ETF, it's not at 52-week highs.
It's the XLK is the Spider Tech ETF.
Yeah, right.
Okay.
So yeah, it hasn't performed as well as the overall market. So there's been what's known as relative weakness, just a little bit, not crazy. But if you look at some other areas of tech, now this is another ETF that probably no one has heard of before, but it's something that we talk about. This is tech with dividends. So it's really your boring, unsexy tech, things like Cisco, right?
So I like it so far.
Yeah. So I mean, what I'm seeing is that there's momentum in things that are, I kind of call it boring tech a little bit, for lack of a better term. I guess if you really wanted to be nice, you could say, tech with dividends, which is what that ETF is. But yeah, I think it's interesting what's going on in things like STX, so Seagate technology. Let's wait for that to come up.
You need to come on the show more often, because I love all the names that you're bringing up.
Yeah, though, thank you. I appreciate that. But yeah, I mean, if you would have told me back in the beginning of the year that I would be looking at things like Cisco and even like a little bit of IBM, I would have said no way, in a million years would I be trading some IBM and like I traded some Dell, put on some Dell yesterday. But notice, by the way, see, this is Seagate Technology, had good earnings, a little bit of a pullback into the 20-day moving average, and a nice turn here. Dell was one that I put on yesterday, but again, you can kind of see the pattern that's going on here in some of these. It's not by accident that one or two of these things is going up. But
is this Dell right here?
Yeah, this is Dell.
Could you because I'm very curious. So you've got those white sort of semi-transparent rectangles.
Yes.
Could you describe what goes into drawing those?
Yes. So great question. I'm sorry that I didn't explain that first, but so this is based on the volume profile. So volume at price of the previous period. So we're in May now. Obviously, this is April, right? So this is basically around one standard deviation of the volume profile.
Got it.
Got it.
So is that lining up with support and resistance, or is that just purely volume by price?
So that's what we've noticed is that, when you do this type of study and formulate what's known as a value area around that volume profile, you'll come up with some really good resistance and support levels. And you could do this on multiple time frames. You could do this on the weekly time frame. I use it a lot on the daily time frame as well as the 1 hour time frame because I'm more of like, sometimes I'm a short-term to medium-term swing trader. So 1 hour and daily are the two time frames that I look at. But yeah, it'll really give me a sense of, if something is basically, trying to rally into a particular area and is failing, or is breaking out. So that's how I basically use that in my trading.
Okay, that's really interesting. I think that will resonate. I'm starting to know these this group of degenerates and perverts by names that are watching right now. And I say that with that like love, obviously. But I'm sure that's going to resonate with a few folks. I'm going to start trying this out. And this is Thinkorswim. We're getting a lot of folks asking for your settings, but hey guys, follow them on Twitter. I put the link in Twitter. If you want to get down to the nitty gritty, you can follow them there and get some of that
Cool.
action. So what else are you looking at?
So that's a little bit of what I'm looking at. I just think it's interesting what's going on in these. So I'll give it another phrase. Old school tech maybe is kind of what I see going on. And then of course there's other the material space is really where I've been kind of living in, as well as again, like last year didn't trade energy at all. I think interesting what's going on if you go through some of these material / industrial names. Emerson Electric. I think what has happened with some of these names that have reported earnings, some of them have sold off originally and then have bounced quite nicely. So Emerson is one of those names that I'm long. Caterpillar, same thing, sold off a little bit the day of earnings, but this consolidation was so tight, it was worth paying attention to it because I love when things consolidate in an uptrend. And it lets the moving averages kind of catch up a little bit with the price action. Mm-hmm. Right? And if you notice where this thing kind of hung in there, it's right when the 50-day moving average caught up here.
That's awesome. Caterpillar, guys, CAT.
And you can see how the picture is so similar when you look at the Caterpillar, the Emerson, the Deere. Same thing here, spending, beautiful trend, right? This Deere has been in since, the lows of the pandemic. It's been one of the most amazing stocks. But so I always come back to names that consolidate, take the next leg up, consolidate, take the next leg up, which requires a bit of monitoring, and being thorough and following these things. But here's your break of value, right? So sometimes I do wait for that little bit of confirmation, and now we're in price discovery mode. So we're outside of value, making new highs, and looking pretty good.
Do you have so when we're in price discovery mode, do you have a method for? Sorry, I'm getting a ton of. I think producer Aaron is blow drying his hair in the background. Okay, thanks. Do you have a method, Christian, when you're in price discovery mode and you're perhaps at all-time highs, for setting what you would approximate as a price target?
A little bit. I mean, I have these things called called extensions away from the value area. So that helps a little bit, taking some targets, because I do like to take targets on my trades and then leave like the last third of the trade as a runner. And I get this question all the time. Once a name is breaking out, some traders get a little bit, they get a little bit scared that, they're seeing that, right? They're seeing a breakout and like, geez, I don't know what to do now. And you just basically have to keep setting alerts to the downside and realize that you're not going to get the tippy top when you do that. So something like this, right? We've now passed this 343, and that's kind of where I would put my, not exactly a trailing, a hard stop, but just a soft alert, just to let me know that something is changing. Right. Okay. And then, then it requires monitoring. If this is continuing to trend for the rest of the day, United Rentals, which again is similar looking chart, I'll put another alert as we go higher, and that's it. And I find it's kind of funny that traders they would rather hold on to something like, hey, give me a price target. But really, in trend trading, we never know how long the trend is going to last. We want to ride it as long as it's going to last, because I don't have a crystal ball. I don't know how long these trends are going to last. I hope they last forever. So then, because the longer they last, the more profits you make. So I'm not overly concerned once something breaks out about achieving a price target. I would rather let it go to where it wants to go.
So I like that. So I think I'm a trend trader too.
Nice.
All right, thanks, bro.
Is that something that you started with, or is that something that you kind of developed?
I think I just developed it over time, because I started with purely technical and I just wanted strength behind the stocks I'm getting in. Yeah. And so then I'm automatically identifying trends.
Well, I certainly didn't start that way. It's something that, over time, experimenting and trying different rules and different systems. I really just kind of fell in love with. I started to read a couple books on trend trading and realized that it can really help you take the emotion out of what you're doing, and predictions, which everybody likes to make predictions, and people flock to the ones, the people that sound most confident making predictions. But if you've been a trader for a while and in investing, that nobody really knows.
Yeah. So, okay. So you said the magic word. You mentioned some books. Are there any trend trading books that you might recommend from your library?
Yeah. So there's a great book by Covell, Michael Covell, I believe it is. And that is I think that is just called Trend Trading, or is it Trend Following or Trend Trading?
It's Following. I'm looking it up now.
Okay. That's a great one. If you're looking for like a nice summer reading book, The Turtle Traders, and Jerry Parker's on Twitter. So, he's one of those guys he's a quiet guy. He doesn't have a ton of followers, but he was one of the original turtle traders. And it's a great story, very easy to read. That's one of my favorite books. And then, a couple other ones like the Mark Minervini series of books are good.
Yeah.
But there's a lot of resources out there. The Market Wizards are a great book too, but specifically for trend trading, those are the two that I like, the ones that I mentioned first.
Yeah, it looks like we've got at least one person that's read the turtle trading one. I'm super into it. I would say, guys, you don't really need to read in life in general as long as you're watching Get Technical, but I'm giving you these resources if you choose to do that. Yeah, so I don't know why you would read if you have this.
Yeah, and it helps. It really helps to kind of spend a little bit of time away from the screens, learning different things. These books are just, they're phenomenal. There's so many of them that are really good that are out there that you can learn from, rather than, it's fun. I spent quite a bit of time scanning and looking at charts and so forth, but I really try, even, myself, I've been trading for a long time, but I still like to read books just to give you perspective. And we never get to the point as traders where, we figured it all out. Right. Mm-hmm. It's always a process, and there's always a lot of investor psychology to kind of overcome on a daily basis.
So what do you think about the FANG names right now?
Well, I think they're names that you continue to monitor, but I think they're just going to be a little bit more difficult. For instance, look at Facebook had great earnings. I do like to come back to names that have had great earnings. So real nice gap up on earnings, and basically came in and almost filled the whole gap here. Checked back to my area of support, which is top of value. You got a nice bounce in this yesterday, but there's not much follow through, right? So a nice green bar on the for volume, a little bit higher than the previous day, but you're just not getting that follow through. The open was just about the highest. So, another one that I'm watching too out of this group, because again, I don't know, nor does anybody, whether or not money is going to start rushing back into the FANG stocks. But Google had great numbers. They gapped up, and they're just kind of sitting around here choppy. So, if you have a long-term account, I think holding names that might be a bit choppier, like a Google and Facebook, fine. But I think for trading, it's hard. These things have gotten really difficult to trade. Amazon, here's a great example of using, the indicator that I use. And I said this on Twitter. I said, hey, this thing is going to have to break 35.54. That is the top of value for the year. Again, that's based on this market profile, and it couldn't do it. It got rejected last week, just by a hair. And now it's back into this range of, what it was doing for the second half of 2020, which is a choppy mess.
Yeah.
And I try to stay out of the choppy mess names and focus on when they start to do something different.
Okay. So what do you think about penny stocks?
I'm not, I don't trade many penny stocks.
Why not?
I think that, well, they're riskier. They are faster moving, but I think that the level of risk that's in them, I do manage a trading room all day long, and I've got I've got usually a decent amount of positions on. So I'm really monitoring those names. And if I were to get into a penny stock, it's a little bit harder to use my technicals with a penny stock that could just really move on someone pumping it on Twitter. Those things really move on that kind of stuff when you're dealing with stocks under $10. Somebody who's got a lot of followers on Twitter could just, make it go crazy. You could post it on a message board. So that's really not my game, is to try to get people to kind of pump it,
Yep.
So that's why I kind of stay away from that stuff. It's not my game.
Thank you for answering that question. I don't think it's my game either. It took me a while to figure that out. Gotta say, I don't think it's my game. So we're getting a question here. So what is the indicator with the parallel bars with the shading called? Chris already answered that. Christian already answered that, but Christian, can you explain I believe it's the
sure.
The white thing.
It's our own proprietary indicator. It's called the market webs. So this is something that me and one of my colleagues actually developed this, and we've kind of just taken it to another step. Like, it's kind of funny because even in my Wall Street career, I worked on algos, but I'm not a coder, I'm not a developer, but I worked with the development team. So it's a little bit similar. So I work with somebody who's developed this, and I give him suggestions on how to basically improve it. And we've improved this a couple times over the last 5 years, but this is something that we only sell to Tribeca Trade Group members right now.
Okay, got it. So I just dropped a link to it, so you guys can peruse that. But there you go. All right, Christian, we are just about at time. Are there any interesting takeaways, either names that you think are set up, or any concepts that you think a group of, I would say, we got some smart people here, but I would say the broad base of people that are quiet, that are not chatting, are definitely beginner level. So what would be interesting for some beginner people?
Yeah, I think that, one of the things, I'm not sure this would be so much for beginners, but, I would take a look at some of these relationships that are going on now. I think that a lot of newer traders over the last year, fell in love with growth stocks, and for good reason. they were great stocks to trade last year. That's where I spent the majority of my time trading was software names and, just high growth, high momentum names. But I think really the dynamics for now have changed a little bit, and you're just seeing a lot more participation, a lot more trending areas in the industrials, materials, financials. We didn't even talk about too many of those groups too, but that's where you're finding momentum right now in this market. So the more that you could be objective and take what the market is giving you rather than, forcing things that are not there. And, if that's a group that you really love, the growth stocks, right now, what I'm doing is I'm just basically setting a lot of alerts and watching those names rather than forcing trades into things that are not in uptrends and basically going for there. And I've got some names that, are my go-to growth names. But right now, I don't have any positions in them because they're not setting up for me. So they're not there yet, but coming into today, we had a gap up. And I'm like, hey, I want to see what C Limited does. I want to see what Hubs does. And so far, I'm not seeing really what I wanted to see to convince me to put on a long here.
I tried with Hubs and I lost money on it very recently. So some viewers might remember that. Okay, so it's not happening in some of our favorite growth stocks. What do you think about home builders?
Home builders have been exceptional. I'm long Lennar right now.
Woo.
And so
that's a name I don't know. Yeah, that's a name I don't know. I usually just pick out of like the top holdings in XHB.
Yeah.
What is the ticker on this one? LEN.
LEN. So
maybe I have seen this.
Sorry.
I was just thinking out loud. I was saying maybe I have seen this, but go on.
Yeah. So this is one of your top home builders. It's one that I keep coming back to, and I like once again that it spent some time going sideways in an uptrend, and now it's trying to resolve higher. DHI is actually outperforming a little bit better. I'm not in this one, but really, really strong. How long does the trend last in these things? I have no idea, but they certainly have the momentum. Are
you considering RSI with this?
What's that?
Are you considering RSI when you're riding these?
I do pay attention to RSI and how that works. I mean, this is one that I love, but unfortunately, sometimes with these names, it's a high price stock, this Restoration Hardware, and the options are ridiculously wide. But this thing checked back right into the top of value support, held it like a champ, and is turning higher. Williams-Sonoma is another one that's got that going on too. And we'll see if Williams-Sonoma, again, it's decently up there. Mm-hmm. So you kind of have to measure the risk with the reward here. But, for now, this group is just continuing to run higher. A couple small cap home builders I'm watching. I tried this one a couple weeks ago and it had earnings, but this is, I think they're out of Texas, Green Brick Partners.
GRBK.
Yeah,
someone just asked about that. Yeah, but it looks like it's breaking above its 20-day moving average right now.
And here's your high momentum one, which is Century Communities, CCS, which is making a new high. Nice gap up on earnings.
Nice. I love it, man. Christian, you've been a wonderful guest. I love the way that you look at stocks.
Thank you.
Because I kind of understand it, and that's refreshing. So Christian, where can folks, if they enjoyed the way that you look at stocks and trend trading, where can they find more from you?
Yeah, so you could go right into my Twitter handle. So it's my first initial and last name at Fromhertz on Twitter. And then my web address is tribecatradegroup.com.
All right. And we are dropping links to that in the chat. Thank you so much, Christian. You've been great.
Thank you. It was a pleasure.
All right, guys. Christian Fromhertz. Check him out. Go onto the Twitter. Go to the website. This is the website right here. I was checking it out. I feel like I want to be that guy one day. Anyways, all right, we're at about 3 minutes here, so I got time to look at one last ticker. One of you guys mentioned GBRK, and then he said it like immediately afterward. He was probably looking at chat. But I mean, I don't see like a really clear daily price pattern here. But we are crossing above the 20-day, and we're not overbought. So there you go. We had a little sell off on earnings, a little pullback, but this might be the recovery back to that high. So that is something to look at, folks. GB. Okay. At least get his bike. I got his bike as a specialized bicycle. I don't remember. All right, we'll look at X. All right, mandatory look at X. Whoa. Okay. X is not overbought. All right, guys, the plan. Here's the plan. I'm going to get out my Fibonacci tool by pressing Alt F, and I'm going to anchor it at the high of this red candle and then the low of this other red candle. All right. And I'm going to set my price target at the 1.618 mark on the Fibonacci for X, United States Steel Corp. We are breaking above the previous high. This has not happened for a while. It took a long period of consolidation. Let us do the booty check. Booty check checks out. 20-day moving average breakout at the same time that we cross above the red line. Pretty cool. Looking good on X. I gotta say, it's looking really good. I don't know if I want to buy it over the weekend, but sheesh, looking good. Let's look at the metals and mining ETF, and damn. Let's see what moving average that's riding. Looks like it's pretty damn close to the 8-day exponential moving average. You could probably find a better one, but this one is trying to catch up. That's a Fibonacci number. XME. X is a holding in there. It's not a top 5. It might be a top 10. I'm not sure. But we love X around here. Looks like we missed a great impulse. So what I would be looking for is some form of correction around 28 and then another possible entry there. Why? Because if you've been watching this show, you know that we have been watching X like hawks for the full resolution of this big dump truck rounding bottom, ladies and gentlemen. At any rate, it is now that time. Thank you so much for tuning in on this beautiful Friday. If you're watching live, big extra thank you. Please hit the like button for producer Aaron. Those likes go directly into his college account. We are paying for Aaron to get his degree in fashion design, to pick up the mantle where Luke Jacoby left off, so we can get another deal with Banana Republic for limited edition Benzinga hedge fund shirts. So guys, if you want to get another Benzinga hedge fund shirt, make sure you like this video. Yeah, at any rate, I want to thank Christian Fromhertz for being on. The dude is awesome. I really like his trading style, so I'm going to try to get him again. Smash that like button if you liked him. Also, just let me know in the comments or in the chat if you liked him, because whatever you guys, apparently, according to Jason Resnick, you guys own me. So I do what you guys tell me to do. Nonetheless, or at any rate, whatever sort of transitional phrase I'm going to use, I just want to thank you guys for being here. Have a great weekend. With me today has been producer Aaron Thomas, filling in for producer Aaron Bree, who apparently lost internet at the Shire. Apparently, it's hard to get a signal. He doesn't got Netgear down there in his hobbit hole. So yeah, I'm Neil Hamilton. This has been Get Technical. Happy trading.